Welcome back to the channel. This is your Honey Badger here, giving you just straight about the RV business every day as usual. And today I'm going to go over RV loans with good credit. What we're going to go over are things you're going to want to write down. I did not bring the whiteboard today. I've decided I'm just going to sit here and chat and not do a bunch of cuts and edits. I want to just talk to you directly. If you are a first timer to my channel, I have 12 years of experience in the RV business. For the last 4 months, I have not worked for a dealership. So all I'm doing is just passing on that knowledge, hopefully not getting blacklisted from the RV business as I go along with this. So let's define good credit in the RV business. Good credit is not always about score. Score helps. That's one of the things that helps determine it. However, what really determines it is a few things. Number one is that you have no bankruptcies, no repossessions, no 30-day lates, no charge-offs, nothing of that nature. If you have any bankruptcies, you have any charge-offs, any of that nature, it doesn't matter what your credit score is, you are considered a subprime candidate. The next thing they want is they want you to have a mortgage or a couple of car payments that you have made. So let me go over that real quick. The first thing that they look at is they look at the highest dollar amount of a car, a truck, a boat, an RV, what they call an installment loan. What's the highest loan that you've had on that? The dollar amount. And then after that, they look at how many payments you made. For example, good credit customers in a bank's mind is if you, the customer, have, let's say you're trying to borrow 50 grand on a RV and you had a $35,000 car payment, you've made 36 payments on that car payment or on that car note. It may be paid off, but you made 36 payments. That's good credit. Now let's go the other way. Let's say you leased or you bought a $100,000 truck, but you only made 3 payments on it and paid it off. That's not considered good credit. That's considered, hey, he was just getting a bridge because he already had the cash. So let's go over that. The highest amount of credit, installment loan, car, boat, something of that nature, and something that you've made at least 36 payments on. This includes a mortgage. So if you had a mortgage, okay, and you've made 3 years of payments on it so far, that counts as an installment loan. It doesn't count towards the amount that they'll lend you. Most of the time they want to go off whatever car payments you've made. Okay. Now, the biggest one I get all the time is, what is the best interest rate in the business? Well, if I'm answering you directly, what's the best real rate you can get? Probably around 5% or 4.99. Now, there are rates lower than that. I've seen rates at 3.99. But let me tell you what actually happens with those loans. Number one, it's determined by the amount financed. So let's say that you're borrowing $250,000. I'm going to get you a better interest rate than if you borrow $25,000. Okay. The other one that determines is the balance of a down payment. So those that put, let's call it 20% down plus tax and license, so probably around 30% down, will get a lot better rate than somebody that tries to put only 10% down. And then finally, credit score. And all credit score does is determine the tier you're in. All right. It doesn't determine anything else. So the tier for a tier 1 credit, you need to be in 800. So in this, you'll go 800 plus will be tier 1, 780 to 799 will be tier 2. I'm sorry if you're hurt by that. Tier 3 would be 760 to 779. Tier 4 would be 740 to 759. And anything below that is realistically subprime. So if you're, let's say, a 739, you're going to get a subprime rate, somewhere around 7, 8, 9% on a loan. depending on the bank and depending on all that. Now, whatever the dealership pulls you at or whatever your phone says you are doesn't determine what your real FICO score is. This is something that people get upset about a lot. My phone says. Your phone doesn't mean anything. What matters is what the bank pulls. Here's what I'll give you an example of. I've watched a guy, 30 years in the Navy. He shows me his FICO score on his phone. It says 735. When I pulled him on Experian at the dealership, he was 804. I sent him to 5 banks. All 5 banks declined him. He was below a 680. So it doesn't matter what you see on your phone. It's what the bank will approve and what the bank score is. I've seen it the opposite way. I've watched a guy who had a 670 score and I threw him through a bank and he came out at tier 1, which means he came out 800. That's incredible. So whatever you see on your phone is nowhere near the truth. What you really need to use the phone for, or the Credit Karma or Experian.com, is to track your credit. Make sure that nothing's on there that's supposed to not be on there, meaning like make sure medical bills, those affect your credit score, guys. They may not affect it on your phone, but medical collections affect your credit score. It affects your ability to buy an RV. Even if it's the principal thing, even if it's a $20 bill. I know I'm going a little off subject here, but guys, medical collections, just pay them. Medical bills, just pay them. They kill your credit when it comes to buying boats and RVs all the time. Now, I'm going to go into a little bit of a awkward subject. You are a good credit customer. That's why you're watching this video. You are the reason why the RV business makes any money. I'm going to repeat that again. You are the reason why an RV dealership makes any money. If everyone came in with a subprime credit to buy an RV, a dealership will close because there isn't enough money from the banks to supplement what the dealership needs to pay out in salaries. Okay? Let me explain that to you. I explained a little bit of this in the cash is not king section, and that video is right there if you want to click on it. But if right now, for this sake, I'm going to go over it briefly with you. When you take out a loan, let's say you take out a $50,000 loan. And let's say that that $50,000 loan is through the dealership. They get a kickback from the bank of anywhere between 3 and 4% on average of the amount financed for giving the bank that loan. So 50 grand and 4%, that's $2,000. Okay. So that's one reason why I always tell folks that you have a better negotiating power with a dealership if you finance with them. If you go get outside financing, you have no negotiating power on the price. While if you finance through the dealership, you have a lot more power of negotiation because of that money, that kickback money from the banks. Now, you may not think 2 grand is a lot of money, but 2 grand, and let's say that's the average loan right now, $2,000, and you make 20 loans, that's 40 grand. That pays a lot of people's salaries. That pays for a lot of technicians. That pays for the dealership to stay open and be able to keep hiring people. So don't overestimate that. Not to take anything away from a credit union, but if your score is under 740, they're probably sending you to a credit union anyway, because a lot of banks want to see that 740 plus score. So 739 below will probably be a credit union anyway. But at the end of the day, that is how you negotiate a selling price of a vehicle, is you tell them that you are financing and you will finance through them. I'm going to go a little more off subject just one more time, and this is going to be about good credit customers. Stop negotiating the price. Price does not matter until you've actually established that you're financing with them, until you've actually established what you're willing to pay monthly and your down payment. Those are the two things that matter the most in the RV business when you're buying one. It's the complete opposite of the car business. It's more like when you go in to do a house, right? Right now, housing is at a premium. There is no negotiation. So all you're trying to worry about is how much out of pocket and how much monthly. You're doing the same thing with an RV. However, when you're negotiating a deal on RV and you negotiate the down payment and payment and you make a lowball offer on both of those, you will have to have the price come down. I'll explain that in another video. Good credit customers also need to understand that interest rates are not below 4%. They're just not. The dealership can tell you they're getting 1.99 or 2.25 or 2.49. What you're doing is you're overpaying for the vehicle to get that premium rate. Let me explain that in a car sense. When you go down to Ford and they offer you 0% for 60 months, you are vacating all of the factory cash or rebates so the lender can buy down the rate from 3.49, which is the standard rate right now in a truck, down to 0. Okay, so you lose all the ability to have any kind of discount. Whilst if you took the regular rate, you would have the rebates. The same thing goes in an RV. Even though there isn't any rebates or cash back or anything of that nature in this business, the one thing you will realize is that if you take the 4.99 rate, which is the average rate right now in the RV business with outstanding credit and at least 20% down, then you're getting the lowest price possible. Because if you want anything lower than that, let's say you are not going to buy unless you have 1.49, because that's what you're quoted at your credit union, and then you find out your credit union's only doing it for 36 months or 24 months or whatever the case may be, then the dealership buys down the rate down to whatever that rate is, and that means you are paying more for the coach than is necessary. Okay. 0% interest does not exist as a real rate in the RV business. Hope you enjoyed this video, this content. Don't forget to subscribe. If you have any questions, please leave them in the comments section, or you can also contact me on my social media page. Thank you so much. Have yourself a wonderful day. We're midway through March and almost to spring.